Well, even with the recent rebound, one of our traders is sounding the alarm over foreign investors looking to lighten up on U.S. assets.
President Trump has just made another critical mistake, and this one could cost the U.S. economy dearly. Bank of America is sounding the alarm. Foreign investors are pulling out of America, and they could take up to $41 trillion with them. Yes, $41 trillion. That's the total value of foreign investment in the U.S. as of February. And now, much of it is at risk of vanishing. What's truly alarming is the speed. In just 1 week, $6.5 billion was yanked out, and another $8.9 billion in investments were suddenly put on hold. These aren't projections. These are real hard numbers, and they're getting worse. And all this is happening while the national debt has hit $37 trillion, a record high. Now picture that debt growing, while the very investors America relies on. Foreign governments, global banks, and international funds start backing away. Why? Because confidence in the U.S. is collapsing thanks to rising political instability, risky economic moves, and Trump's unpredictable trade policies. This is more than just a warning. If the exodus continues, it could shake the stock market, rattle the banks, crash the dollar, and squeeze the economy. We're talking higher prices, lost jobs, and a government struggling to borrow the money it needs to function. So the question now is, how far will this go? Hit that subscribe button, because in this video, we're breaking down what's really happening and why America's financial future is suddenly on shaky ground. For years, America was on a high. Foreign investment was flooding into the country. Global capital was arriving at record levels, and by early 2025, the U.S. had become the world's #1 destination for international investment. The total stock of foreign direct investment had reached about $41 trillion, a historic achievement that reflected global confidence in the strength and stability of the American economy. It seemed like nothing could slow this momentum. But that changed quickly when President Trump launched a series of aggressive trade and tax policies. He began threatening sweeping tariffs on everything from copper to pharmaceuticals. He introduced proposals like Section 899, which could impose 20 to 30% taxes on foreign income. As expected, this shook investor confidence almost immediately. Markets stalled. Foreign investors, once steady and committed, began to question whether the U.S. was still a safe place for their money. The numbers reflect the damage. In the first quarter of 2025, foreign direct investment in the U.S. collapsed to just $52.8 billion, the lowest since 2022, and far below what was expected. Meanwhile, the Trump administration was promising a flood of new money. Officials and aligned media claimed that $10 to $14 trillion in new foreign investments were on the way, presenting it as proof that the America First agenda was working. But fact-checkers quickly pointed out the reality. Reports from the Financial Times and other outlets confirmed that those figures were misleading, and in many cases, completely false. What was being sold as investment was often just announcements, plans or ideas that might happen in the future, but only if conditions were right. In some cases, these announcements weren't even new. They were old promises, repackaged to sound like fresh deals. This wasn't new capital entering the economy. It was a lot of noise with very little substance. In fact, experts say that at most, only $2.1 trillion of it might turn into actual investment. Even the few projects that did begin are now on shaky ground. Many are facing delays or internal reviews, and the reason is clear. Investors are nervous. They're watching the Trump administration push more tariffs, apply heavy taxes on overseas earnings, and engage in unpredictable diplomacy. In the world of international finance, unpredictability kills momentum. If these companies start officially canceling or walking away from their U.S. projects, the consequences could be massive. Billions or even trillions could disappear from the American economy. That would mean job losses, plant closures, stock market drops, and long-term damage to the reputation of the U.S. as a safe place to invest. Let's be clear. $41 trillion is a huge amount of money. It's enough to impact entire industries, crush regional growth, and shake the foundations of the U.S. economy. Banks, including Bank of America, are warning about growing risks. They're talking about capital flight and shrinking liquidity. Financial institutions that issue loans and manage global investment funds are already adjusting their risk models, planning for bail-ins, and reevaluating their exposure. Because the very investors who once helped fuel America's rise may now be heading for the exits. So, which parts of the U.S. economy are most at risk? Let's break it down. The damage will likely start with corporate debt and equities. Foreign investors currently hold around 17 to 18% of all U.S. stocks and bonds. If they begin pulling out quickly, it could shake the entire market. Stock prices could plunge, interest rates could spike, and millions of Americans could see their 401k retirement savings lose value overnight. Next is manufacturing. This sector depends heavily on foreign-owned factories and international supply chains. If investment slows or reverses, jobs will be on the line. States like Michigan and Pennsylvania, where foreign companies support hundreds of thousands of jobs, could feel the impact first. Technology and biotech are also exposed. These industries have grown rapidly with help from global capital. But if that support fades, research budgets could shrink. That means slower progress in areas like artificial intelligence and life sciences, putting the U.S. at risk of falling behind. All of this points to a deeper problem: growing uncertainty and shrinking trust. International investors, once confident in America's stability, are starting to question what's really going on. Some are confused, others are angry, and many are now asking a hard question: is the U.S. still a safe place to invest, or has it become too risky to trust? What makes this moment even more risky is that it's happening while the U.S. is already buried under over $37 trillion in national debt. For decades, America has relied on foreign capital to support its spending. Countries like Japan, China, and Germany have consistently bought U.S. Treasury bonds and invested in American stocks, real estate, and tech companies. This constant flow of foreign money has allowed the U.S. to fund its military, social programs, and consumer economy without needing a balanced budget. But now, that very dependence has become a major weakness. If foreign investors start pulling away, the U.S. could struggle to finance its most basic operations. Bank of America has already picked up warning signs. In just 1 week ending April 30th, U.S. stocks saw an $8.9 billion outflow, while European and Japanese markets pulled in a combined $7.8 billion. Japan, in particular, had its biggest investment inflow in over a year. Investors aren't waiting to see how the U.S. economy recovers. They're already moving their money. And this isn't just a temporary shift. It's part of a much deeper structural change. Some of this shift is also linked to long-term global trends, like the rise of emerging markets, growing demand for regional diversification, and new digital financial instruments. But even with these trends in play, the U.S. is losing trust faster than most. Even more concerning, not all of the money is going to other stock markets. According to the same report, a growing share is being redirected into cryptocurrencies and high-yield bonds. That's a serious red flag. It means investors aren't just losing confidence in U.S. stocks. They're starting to question the strength of the entire American financial system. One of the biggest reasons confidence in the U.S. is collapsing is political instability, and a lot of it is tied to President Trump. During his second term, he brought back the trade war mentality that many of America's global partners strongly oppose. He's added new tariffs, canceled others, and created a policy environment that's unpredictable and chaotic. Markets don't like uncertainty, and Trump's approach has injected serious doubt into global investment decisions. Investors aren't just reacting to the tariffs themselves, they're reacting to the overall message. The U.S. no longer feels like a stable, reliable partner.
There are a large number of foreign investors who are worried not only about tariffs, but just about America's reliability as a partner.
Rebecca Patterson, former chief strategist at Bridgewater, confirmed this trend after attending recent meetings with the World Bank and IMF. She reported that many foreign investors and policymakers are now openly discussing reducing their exposure to the U.S. And it's not just about economics anymore. There's growing fear that the U.S. could use its financial systems as weapons, freezing foreign assets, enforcing political sanctions, or trying to control currency relationships. That fear is driving money out. The numbers are already showing signs of trouble. According to U.S. Treasury data, foreign holdings of U.S. assets had jumped by $4.4 trillion over the previous year, mostly due to tech and AI stocks. But now that growth is turning negative. Even a small 3% drop would mean nearly $1 trillion pulled from the U.S. economy. To put that in perspective, the S&P 500 is worth about $52 trillion. A $1 trillion sell-off would send shockwaves through Wall Street and global markets. And this isn't happening in one big crash. It's unfolding gradually, in quiet, calculated moves. But the impact could still be devastating. Even wealthy American investors are getting nervous. Bank of America's private clients, who control about $3.7 trillion, are already changing their strategy. They're moving into defensive assets like utilities and high-dividend ETFs, while dumping inflation-protected bonds and financial ETFs. This shift shows they don't believe the official story that the U.S. economy is strong. They're bracing for stagnation, and that speaks volumes. There's another major risk in play, the U.S. dollar itself. Over the past year, the BRICS alliance has expanded aggressively into Southeast Asia. In early 2025, Indonesia joined as the first full Southeast Asian member. Countries like Malaysia, Thailand, and Vietnam followed as official partner nations. Now BRICS includes 11 members and several partners, representing nearly half the world's population and more than 45% of global GDP. This isn't just symbolic, it's changing the world's economic landscape. The United States used to be the main hub of global finance and investment. But with BRICS gaining influence, America is now facing serious competition, not just in trade and politics, but in attracting investment. Foreign investors, especially from Europe, China, and the Global South, are taking a hard look at alternatives. Southeast Asia, now closely tied to BRICS, looks more stable and forward-looking. Countries like Indonesia, Malaysia, and Thailand offer growing consumer markets, clearer trade rules, and funding through the BRICS New Development Bank, which provides infrastructure loans without many of the strings attached by Western institutions. Meanwhile, U.S. trade policy continues to swing wildly, from threats of 10% tariffs on all BRICS imports to talk of 50% tariffs on Brazil. That kind of volatility is scaring investors away. By contrast, BRICS-aligned countries are forming stronger trade and investment ties, and they're being seen as safe havens from America's unpredictable behavior. Across the globe, major financial centers in Europe and Asia are quietly preparing for a future that doesn't revolve around the United States. They're building regional trade deals, launching independent payment systems, and strengthening their local capital markets. The long-standing idea that the U.S. is the center of global finance is no longer a given. All of this points to a hard truth. America is losing its economic edge, and it may not be able to win it back. Bank of America's warning isn't just speculation. It's based on real data and the actual behavior of investors. The shift is already underway. If even a portion of the $41 trillion in foreign investment begins to exit, the impact would be massive. This wouldn't be just a Wall Street problem. It would affect jobs, interest rates, inflation, and the government's ability to borrow. In short, it would touch every household in America, whether they see it coming or not. The question isn't if this will happen anymore. It's how soon. The early signs are already here. The warnings are growing louder, and the numbers are speaking for themselves. For too long, the U.S. financial system has relied on global trust, but that trust is cracking. Unless bold steps are taken to restore confidence, America could be heading toward a painful reckoning. So the real question is, when global faith in the dollar fades, what happens to the empire built on it? Make sure to subscribe and stay tuned for our next deep dive into what the media isn't telling you.